Okay, so before we get started on the modeling exercise itself, I want to do a walkthrough of the model that we're going to build. I want to show you what we're going to start with and what we're going to finish with. So, big picture, we're going to be getting a request from the CFO. They're going to need some help building out a three-statement model. What they're going to send us is just some unformatted raw data. This is really common in the FP&A setting. Somebody goes into the accounting system, clicks export to Excel, forwards it on to you. So that's what we're going to be receiving. In addition to that, there's going to be a handful of support schedules that are going to help us model out the completed model. It's going to be related to the headcount and the capital expenditures. From there, and then using only that information, we're actually going to be able to make a completed model, a fully integrated three-statement model where all the statements are connected with a lot of support behind it. So I'm going to show you that now. First thing, here's what we're going to start with. This is the poorly formatted data that I talked about. You can see it probably just somebody said, all right, I'm going to export this to Excel, send it on. So here it is. I don't know what is hard-coded versus what is formulaic. We're going to have to figure that out. And if I look at the layout, I've got an income statement here, goes down to my net income, and then I have a balance sheet, and that's pretty much it. If I scroll down, everything else is blank. If I look up at the top here, I have the dates. Thankfully, these are actually formatted nicely. That's not overly common. And I can also see a tag here that these are actual. This just means this is actual information that has already happened in the past. As I scroll out to the right, it looks like we have a monthly income statement and balance sheet for 2 years. And then what we're going to be doing is taking this actual information and building a forecast. And that's going to be the majority of the course. How do we take this history and translate it into a future forecast? So using this information and this information alone, along with a couple support schedules, here's what we're going to build. So here is now the completed model. Here's that same income statement going down to net income. We're also going to have an EBITDA schedule here, which I'm going to talk about why this is so important and why you need it for covenant analysis, a key part of this course. And then we have the balance sheet down here. And then below that, the statement of cash flows. So this is something we're going to be building from scratch, which was not included in the original raw data. And before I scroll down a little bit further, I just want to show you the top of the model. So we've got the same dates here that we just saw, the monthly history with the actuals. And then after those 2 years go by, it's going to flip over to a forecast. And this is the whole point of the course. How do we take this historical information and create something for the future? And so you can see here, everything is formulaic. It's going out by month for 2 years. And then we have annual summary information at the end, annual totals, which just helps summarize things for our reference. We also have some KPIs over here, year over year growth, as well as percent of revenue, just really helpful points of reference as you're building a forecast like this. So now I'm going to show you the rest of the model. I'm going to come back here to where it flips from actual to forecast and just scroll down. We're going to go through this video by video. So here is the balance sheet. And this is one of the most frustrating parts of building a three-statement model. Everybody kind of understands the income statement, but not the balance sheet. How do I build it? How do I forecast it? And most importantly, how do I make it balanced? We're going to talk through all of that in individual videos. You can see here, everything is modeled out by formula. There's no plugs anywhere. Thankfully, I'm going to show you how to do all of that. Down here in the statement of cash flows, another confusing schedule, but once you understand how to build it using the indirect method, not only is it very simple, you can actually leave it alone forever, which is just so great. So we're going to build it early in the course, and then you'll see how we can just drag it forward into the future as a frame of reference. So below our three statements, then we have support schedules. We need underlying detail to help populate that three-statement model. So the first of those schedules is called the working capital. We're going to talk through how to model the AR, the inventory, the prepaid expenses, the AP, and the accrued expenses. We're going to be using some very common working capital statistics, which is what you would use at this stage in the model. More detailed AR and AP aging, that would come at a later time. Then below that, we have the bonus accrual and tax accrual schedules. We're going to talk through how to build what's called a base schedule, which means the beginning, plus or addition, the subtraction, and then the ending balance. These ending balances are going to flow through to our balance sheet. So we're going to talk through how that works. We pull information from our income statement, then we reflect a cash payment so that everything works in our statement of cash flows. Then we have a fixed asset schedule here, and this is going to link to some of the support information that I talked about. We have maintenance CapEx and growth CapEx. I'm just going to show you them quickly. Some of this information is going to come from the CFO, the projected projects that we want to model out, but it's going to be on us to actually build out the formulas. So this is the growth spend. This is the maintenance spend, same idea, list of projects, but we need to model the formulas. And the other support schedule, I'll just show you that now, is headcount. CFO is going to send us all of the positions in the company, the compensation, and the start dates, but it's going to be on us to actually model out the base compensation. So these support schedules are going to pull back to our operating model. Again, just going through the fixed assets, that's going to flow through here. And then we're going to get to the most complicated part, building the debt schedule and building the cash flow sweep. I'm warning you, this is going to be complicated, and we're actually going to introduce some circularity into this model. So yes, circularity, it's going to be on purpose. The reason for that is one is accuracy, but two, if you know how to manage the circularity and ultimately break the circularity with a circularity breaker, it will make you a much more experienced modeler. So we're going to include that in this course. We're going to walk through how to build a cash flow sweep, how to build out a revolver, which is like a giant credit card. We're going to have capacity and borrowing base for the revolver, as well as the senior debt. It is all going to flow down through here to the covenants. We have the fixed charge coverage ratio and the leverage ratio. And you'll see the reason we're including this is because this is a request from the CFO. So a lot of information. We're going to go through it video by video. Again, the debt schedule, it is complicated, but we'll get there. This is now all going to flow into a summary so that we have something printable, right? A friendly one-pager that we can send around to our team. I'm really passionate about this topic because everybody tries to model where they print and then print where they model, and it just doesn't work. You want a separate summary that you can send around. So we're going to talk through how to make that quick and then automated. And then lastly, we're going to have error checking. Always the most important sheet in any model. What can go wrong in the file? We've got a lot of things that tell us if our model is working correctly, a handful of things related to the business, and then the circularity breaker, which I mentioned a few minutes ago. How do we toggle the circularity on and off? So amazingly, we can build all of this from that fragmented information that I showed you just a few minutes ago. And then once you know how to do it, you're going to have the toolkit to build these models in the future. So that's it for this video. In the next video, we're going to take a look at the email from the CFO and we're going to get started.